Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, October 6th. On Monday, stocks plummeted across the world on global financial and economic concerns, although late session buying interest helped U.S. stocks pare more than half of their losses in the final hour of trade. The Dow, NASDAQ, and S&P 500 fell 3.5%, 3.8%, and 4.3% respectively, all settling at multi-year lows. Still, the end result was a huge improvement from the session's worst levels when the Dow, NASDAQ, and S&P were down as much as 7.8%, 8.8%, and 8.3% respectively. Helping stocks pare their losses was a headline that France proposed an emergency G8 meeting on the financial crisis, which increased speculation that global central banks may make a coordinated intermediate rate cut. Overseas equity markets fared even worse than the U.S., with the Dow Jones World, excluding U.S. index, falling 7.3%, while Europe fell 7.6%. The selling in Europe was driven over concerns that more bailouts of European financial institutions are needed after Germany's government stepped in to prevent the collapse of property lender Hypo Real Estate. In addition, interbank lending rates rose in European currencies as banks remained reluctant to lend to each other. Global growth concerns were prevalent in commodity trading, with the CRB index plunging 5.2%. Oil prices dropped 5% to $89.15 per barrel. Meanwhile, risk-averse investors bid up the prices of treasuries in a flight to quality trade. The 10-year note climbed 36 ticks, sending its yield down to 3.47%. On a related note, gold, which is considered a safe haven, rallied 4.4% to $865.50 per ounce. Weakness in Europe prompted a large 1.5% rally in the dollar. The euro fell 2.2% to $1.35, and the pound declined 1.7% to $1.74. In an attempt to improve liquidity and shore up confidence, the Fed announced this morning that it is planning to double the outstanding term auction facilities balances to $900 billion. The TAFs aim to improve liquidity by allowing depository institutions to borrow from the Fed using the same collateral that is accepted at the discount window. The Fed will also start paying interest on depository institutions' required and excess reserve balances. The announcement failed to lift the stock market. The sharp declines in global stock markets induced traders to raise their bets on the size of a rate cut at the October 29th FOMC meeting, with increased speculation that there will be a coordinated global central bank intermediate rate cut. Fed Funds futures traders suggest a 52% chance that the funds rate will be cut by 75 basis points. I'm Pat O'Hare for Briefing.com. Thanks for listening.